Hey, how are you? Hope all is well. This is the fourth video in the series of our discussion on business use of vehicle. And today we are going to discuss various pointers based on the questions that I have got on this topic in the past or in last couple of days. So let's go point by point. So first question that I usually get is, should I lease a vehicle or should I buy a vehicle? Does it make sense for me to lease a vehicle or does it make sense for me to buy a vehicle from the tax deduction point of view? So let me tell you a few things which are no-brainer, so to say. First of all, if any of my client is buying a SUV and that SUV is more than 6,000 pounds in gross weight, but less than 14,000 pounds, I usually tell them that it makes more sense, it is more smart to buy that SUV because you can write off the whole cost of that SUV right in the first year. So if it's an SUV and more than 6,000 pounds, my usual suggestion is buying makes sense. Okay. Now, even if it is a car, for car, the first year depreciation is 18,100 plus the second year 16,100 plus the third year 9,700. If you add the three, then in 3 years you get a deduction of almost $44,000. That deduction of $44,000 of depreciation, that is if you buy that car, is going to be usually more than the 3 years lease cost that you will spend on a similar car. Again, the depreciation deduction of 18, 16 and almost 10,000 in 3 years, the total of that almost 44,000 is still going to be more when you buy that car rather than the 3 years lease cost on a similar car. So even in that situation, it might make more sense for you to buy the car than to lease the car. Okay. Second example was that. Then third example, if some client tells me that I do a lot of mileage, I put a lot of miles on a daily basis on my vehicle, then definitely if you lease the car and then you have to pay mile overage, it might cost you more. It might be more expensive for you. You might as well buy the car if you're using a lot of miles, right? So again, buying might make sense in that scenario. Then fourth example that comes to my mind is that if you're buying something that is fully loaded, you're buying a vehicle that has the latest technology, all the Bluetooth and navigation and expensive stuff inside it, you might not want to give back your car after 3 years of lease, right? If the car is fully loaded and you have put in all the expensive auxiliary attachments in the car, then you might as well want to buy the car. So in that situation also buying makes sense. So in these 3-4 examples, in most of these examples, buying makes more sense than leasing. I cannot really think of an example where leasing might make a lot of sense unless a client tells me that this is a car, I don't want to use it for more than 3 years. And this is a car that should be given back in 3 years. It starts giving a lot of problem in 3 years. And I don't want to keep this car for more than 3 years. Maybe in that scenario, I might suggest a lease. But otherwise, in most of the cases, buying makes sense. If you are in a scenario where you think that leasing might make sense for you, give me a call, let us talk, and let us deliberate on what makes sense for you. Okay, so that was the first question. Second thing, you should track your mileage. You should track your business use of the vehicle. Okay. And here is what I do, or what I used to do when I used to do a lot of visits with my clients before COVID. At that time, I have this app on my cell phone. The app is called Mile IQ. Mile IQ. It costs me around $5 a month, but it starts tracking my visits right from when I start my vehicle to where I stop my vehicle. So it tracks all my use of vehicle. And then it has a very easy way where I can select those visits and just categorize those as personal, if those were personal mileage, and just select those visits and just categorize that as business if those are business use of vehicle. And within maybe 5 minutes or 10 minutes a month, I can categorize the visits as personal and business, and I can download everything in an Excel, or they will email me the report, and it's so easy to track. Okay. It's always a good thing to track your mileage and have something like Mile IQ. Again, all this thing matters only and when you are audited. But in case of audits, this would be a very handy thing for you to present. It would be very smart for you to present a report in that kind of a detail and professional presentation. So track your mileage. That is important. Next question is, mileage deduction might not always be bad. Okay, what is mileage deduction? That's the simple deduction that we spoke about, where you can take a deduction of 57.5 cents per business mile you drive. Okay, so you keep a track of business miles, multiply that by 57.5 cents, and whatever amount comes, you can take as a deduction in your business. Okay, compared to this, there is an actual method where you have to track the actual amount you spend on the various expenses. Plus, you can take the depreciation and the interest, or you can take the lease expense, right? So there is a mileage deduction, simpler method, and then there is an actual method, okay? And even though actual method is very popular, most of the people do actual method. They put all their expenses on their credit card, business credit card, and they track the actual expense, and that is very popular. But not always is the actual method the most beneficial one. There is a possibility that the simple method, the mileage method, might make sense for you. It might make sense for you if you are putting a lot of miles. If you're putting a lot of miles, it is possible that the mileage method, which is the simplest method, might end up giving you more deduction than going through all the hassle and using the actual method. An actual method might give you a lesser deduction. Okay. There is a rule of the thumb, so to say, where it is said, if you read on the screen, it says, if the cost of your vehicle is less and the miles are more, if the expense of your vehicle is less and the miles are more, then the mileage method, the simple method, makes sense, right? Obviously. And if the expenses are more but the miles are less, then obviously the actual method or the expense method makes sense, right? So that's, don't assume that the actual method is the best method for you. If you are a lot of mileage on your car, maybe the simple method, mileage method, might make sense for you, okay? The ownership dilemma, okay. This is a thing where, not that the clients always ask me about this, but I try to make it a point to tell them about the ownership, okay? Because I always tell them, when you buy a vehicle or you lease a vehicle, buy that vehicle or lease the vehicle in your personal name, because look, your vehicle, only you are going to drive. You're not going to give your vehicle to your employees to drive, or to your colleagues to drive, right? You are going to drive yourself. So you might as well have the vehicle in your name, registered in your name, so that you pay your personal rate of vehicle insurance, auto insurance, and your personal or individual rate of auto insurance would be cheaper, okay, compared to if you buy or get or register the vehicle in the business name, and then because it is registered in the business name, they might give you commercial insurance, which would be expensive, okay? So register in your name so you get cheaper insurance than registering in your business name, because else you will have to pay commercial rate of insurance. And why pay commercial rate of insurance when you are the only person who are going to drive that vehicle? Make sense? So that's the ownership. But then when you make the payments for the vehicle, whether you pay the lease payments, whether you pay the down payment, whether you make the mortgage payments, all the payments for the vehicles, the payments should all go from your business account or from your business card, okay? So register in your name, but make payments from the business account or on the business card, okay? Next question, can you finance the vehicle? Yes, you can finance the vehicle, and if you finance the vehicle, even the interest on the auto loan is also allowed as a deduction, okay? Do you have to buy a new car or you can have a pre-owned? You can buy new or you can have a pre-owned car. That's fine. There is no restriction on that, okay? Next, usually one vehicle and 5 years. Let me explain what I mean by one vehicle and 5 years, okay? So first of all, let me explain the 5-year thing. When you buy a vehicle and you depreciate the vehicle, whether it's an SUV and you're depreciating all in the first year, or you're depreciating over a number of years, once you have a new vehicle, once you have bought a new vehicle and you're depreciating it, you should not have another vehicle for next 5 years, okay? This is not written anywhere. It's not by operation of law or something, but this is like the safe harbor. This is what we all CPAs, we all accountants follow. This is the general practice. Because, you know, I have clients who will buy an SUV and write the whole SUV $65,000 off in 1 year. And then next year, they might want to buy another SUV. And then they want to write off another 65,000 again in the second year, and so on and so forth. And I tell them that once you have bought an SUV in 1 year, you cannot take that deduction again for next 5 years, okay? So once you have taken a vehicle and written it off or depreciated in 1 year or over the next few years, you cannot have another vehicle, you cannot buy another vehicle and try to write it off for next 5 years, okay? So that's the 5-year rule. Now, what is the one vehicle thing? Okay, one vehicle thing is the following. If you are, in my example, if you're a doctor, if you're a medical practitioner, if you're a physician, and you're the only doctor in your practice, and it's a small practice, then you can have only one vehicle in your business to write off, whether that one vehicle is bought and you are depreciating, or whether that one vehicle is leased and you're writing off the lease payments, okay? If you are the only physician, and if it's a small practice with 4 or 5 or 10 employees, and your collection or gross revenue is say $1 million or $1.5 million, this kind of practice with one physician, less than or approximately 10 employees, and a collection of say $1 million, $1.5 million to the max, you can have only one vehicle. It's prudent only to have one vehicle in your business as a write-off, whether you buy the vehicle or whether you lease the vehicle, only one of those, okay? But now say it's a bigger practice and you employ multiple physicians. You are not only the one physician, you have multiple physicians working in your practice. Okay. You have multiple locations for your practice. Okay. Few examples that I'm going to say here: multiple physicians, multiple locations. You have multiple entities, active entities, uh, not entities just for the sake of opening multiple entities, but multiple active entities where every entity is bringing in $1 million or $1.5 million. Or if your practice is big enough, like your practice collects more than $3 million, for example, right? Or if you have more than 20 employees, it's a big practice having more than 20 employees. Or what else can I think? Or if your spouse is the practice administrator and he or she is actively managing this more than 20 employees. So I gave you a few examples, right? You have multiple physicians, multiple locations, multiple active entities, more than $3 million in collection, more than 20 employees. Your spouse is actually managing the practice. He or she is a practice administrator managing more than 20 employees. If this is the scenario and you're keen on having another vehicle, please give me a call. Let's discuss the situation. And I will give you my opinion if I think that such an idea would be ordinary and necessary. And then you make the decision if you want to have another vehicle in your practice. Okay. So that's the one vehicle rule. So one vehicle and 5 years. And other than that, on your screen, you have ordinary and necessary. We discussed that in the third video, what that means. More than 50% business use, that also we discussed in our first video. And allocate some percent for personal use, which I always try to do with all my clients in good faith as a safe harbor. We always try to take some percentage, 20% of vehicle as personal use in good faith, just as a safe harbor. Again, all this thing matters only and if you get audited, but in case you get audited, God forbid, then if you allocated some percentage for personal use, it makes the auditor's life a little difficult. After you yourself have disallowed or let go 20%, it makes his life a little difficult to disallow you even more than that, you know? So I always say, allocate some percentage for personal use, always in good faith or as a safe harbor. So I hope all these 4 videos have clarified a lot of doubts that you might have on business use of vehicle. If I've left out something, if you have any more questions or concerns, please let me know, and I'll try to address each and every of those. I hope this helps. I'll be back with more videos and more information on new topics. Till that point in time, take care, stay safe, and stay tuned. Talk to you soon. Take care. Bye-bye.